Taking a look at today's interest rate markets, let's take a look at the 10-year note futures as they're experiencing some selling pressure for a third consecutive day. We are seeing them down now and trading in the 120 handle, 120.31, which is the low end of the contract range and the low end of the range for the futures market in basically 3 years, going back into this 120 handle. As the markets are adjusting to various storylines and themes out there, and particularly today, a lot of Fed speak. A couple of Fed officials indicating the need to normalize sooner rather than later, basically hinting at the idea that they are going to increase rates at a rapid or a much more rapid pace than maybe even what had been enunciated after the meeting. Coupled that with the concerns over inflation, and I think that that's why we're seeing this shift in the treasury markets. The third thing that was also discussed today was the reining in liquidity provisions. And so again, all those things are viewed as hawkish in tone, and even more so than what was discussed just a couple weeks ago coming out of the meeting. So the market's adjusting for that potential as we move forward. And I think when you look at today's price action, quite a shift here in the yield curve as well as yields. Looking at the 10-year yield, up 13 basis points today to 254.5 basis points currently, which is the very top basically of the range for the last 3 years, pre-pandemic levels. I think you have to go back to basically this period, early or April of 2019, to see the 10-year note futures trading at this level and yields up around this 255 basis point level. Couple that with the steepening of the curve today as well. So the back end of the curve is selling off more so than the front end of the curve. So we are seeing some of the inversions that were in place coming out of the market, at least temporarily. Now the 2-year, 10-year inversion has come out of the market. We are seeing the yields on the 10-year back above the 2-year right now. So again, shifting dynamics in the yield curve today, steepening, and selling pressure on the 10-year note futures, pushing them down to basically 3-year lows.